All right, folks, we've got John Hoagland here from TopStepTrader and TopStepFX. He's been on the show before, episode 3 of the Trading Nut podcast, and I'm getting him back on because we never got a chance to walk through a price chart with him and see how he actually trades. So, John, over to you. We've got a couple of trades you're going to walk us through today on the S&P 500, so really looking forward to seeing what you've got for us, seeing how you can educate these guys out there watching.
Okay, all right. Well, I'm going to use a couple of different platforms. I'm going to use the TopStepTrader platform for the daily and the 30-minute chart, and then I'm going to be using the market profile for more context and more of an entry on this particular trade. So I'm going to open up. This is the TopStepTrader platform here. Now, this is the daily chart. It's a little bit busy because I've got like all the correction levels from the overall highs that we're still kind of working our way through. Got some areas of balance that I put out there, and this morning the market opened much higher than settlement, and I'm going to move to a 30-minute chart to kind of show what we're talking about here. The settlement price from yesterday is marked in blue there. It's 30.62 even was the settlement price from yesterday. Now, yesterday we had a pretty substantial move to the upside, and the market is still in rollover. So I tend not to like directional moves during rollover because most of our longer term traders are more interested in getting a cheap rollover done than they are in being forced to move directionally. So when we look at this, here's the opening bar last night. So the market really never even looked below settlement from yesterday. The market continues to rotate higher, pulls back a little bit, continues to rotate higher. So one of the first things that I think about in the morning when I walk in and I open up my charts and I take a look and start doing my research for Topstep and for the people there as well as for my own trading is I'm going to be noticing how far we've come away from settlement. Now, I didn't really want to think about fighting this upside move because we got some news that the Fed is going to be doing some buying of corporate bonds, and that's with the rally from yesterday. But I thought, there's got to be a whole lot of new longs in this market, and then a whole lot more new longs that are cheaper, that are shorter term, weaker money traders. When we to look at the volume overnight in the S&Ps, it's really very small. There's no major players involved in this market typically in the overnight, unless there's some sort of special event. Didn't feel as though last night was one of those special events. So we're looking at very low volume, very short time frame, new money, new longs in weaker money. Okay, these aren't the longs that are going to be holding these positions for days, weeks, or months. These are pea shooters like me and probably like most of you. So seeing that we've got a substantial pool of longs from overnight, I'm already thinking, well, if we can't take out the high from overnight, at some point, all of these weaker money longs are going to get nervous, and they're going to run out of this market, and they tend to do so en masse. All it takes is a couple of them to start price moving in the opposite direction where all these longs are. They're gonna move this market. So the weakest ones are the ones that were the last ones in, the laggards that bought up here before the open. They're probably the first ones that got nervous and started this move to the downside. And as all of the longs that were accumulating all night long started to lose money, or at least lose some of their profits, or actually start to lose money, it kind of snowballs and takes the market, in essence, right back to settlement. Where it began, so it ends. So when I look at the market in the morning, the first thing I do is I'm going to be watching the opening range in the regular trading hour session. That's that 8:30 U.S. Central Time, the old market opening, and I'm going to watch that on the market profile. So I'm going to open up the profile, and I have the overnight range is presented right here. This is today's regular trading hour range. We don't know any of this is going to happen because it's 8:30 in the morning now. You remember I said we've got a whole lot of overnight longs and even some longs from yesterday's regular trading hour session, depending on more buying coming into this market to perpetuate price higher for them. Here's our overnight. Here's the overnight high that I was looking at that I said, if we can't take out that overnight high, we're going to get a whole bunch of weak money longs nervous, and this market is probably going to rotate back to the downside. So when I look at the market profile in the morning, the first thing I'm watching is this gold bar here, which is the first 1 minute of trade. So the market, I'm going to make it really big so everybody can see. The market profile is a different way to organize the information. A period represents the range for the first 30 minutes. Okay. This little blue caret here is the first trade of the regular trading hours session. 8:30 on the nose, this is the first trade. The market opens, takes a couple of ticks higher, trades down to this level. This gold bar here represents that first minute of trade. It is called the opening range. Once the opening range is penetrated on either side, when the market opens is out of balance, as the S&Ps did today, I'm going to be looking to execute quickly. Again, the market's out of balance. The market keeps the opening range at the high of the session here. The opening range breaks at the bottom here. After about 50 seconds, I've already got to stop in to get short below it, and I've got to stop in to get long above the opening range. So the market hits my stop, I get short. It kind of rotates around. It never takes out the high of the opening range. So I get a pretty decent move to the downside early in the session because I know it's difficult to see direction here, but the opening range is the high of the session here. So A period drives all the way down to this level.
Right.
All right, great. I'm thinking there's more to this trade. So I don't move my stop. I stay in the trade. B period comes up, gives another opportunity for a short, rotates back lower. C period, the third 30-minute period comes up, hits my stop, but doesn't accept. Okay, there's not much time up here. There's not much of continuation to the upside here. All they did here was come back up and take out the stops. I was one of them. So the first trade today, even though it did offer a pretty decent opportunity, I had bigger eyes. I had dollar signs in my eyes, Cam, and that does tend to happen, right? So now I'm flat, and I'm just going to be patient, and I'm going to wait to see what happens later on. Do you want to look at the second trade now?
Yeah, definitely.
Okay.
So are you able to show us that on the price chart? Like, is it too small to be able to see where you would have gone in and out?
We can take a look at it here. And here's the 830 bar.
Yep.
Here's that open, and you can see there's a very slight shadow above that opening. That's that two little ticks above that opening price. So the market kind of already gave me what I was looking for to the downside. Okay, if I was reasonable in my expectation, which I had bigger expectations for the trade, I probably could have protected some of that profit, but I was still relatively confident in it. So here is probably the low of that opening range. I'm just taking a stab at it here. Remember, it's the first minute, and it was, let's say, let's call it 12, 13, maybe 18 ticks wide. So it wasn't a small trade, right? I mean, that's for a pea shooter like me, that's some pretty decent risk. But I see these opening range trades happen a lot, especially when market opens away from settlement and out of balance. Okay, so here we get them all the way down here. We get the move up to here. This little pop above that high of the opening range is what takes me out.
Right.
Okay, boo-hoo. We've all taken losses before. I'm well aware that it doesn't mean that I'm a bad trader, a bad person, and that I'll never have another winner again. So I move on. Still looking for this bigger move to the downside towards that settlement price, which is
And can I
Where did
just
it
ask
go?
what the settlement price? How you define the settlement price? I haven't heard of that term before, but I'm
Okay,
guessing what it is.
the settlement price is still there, but it was really before electronic trading and before you could trade pretty much 23 hours a day, 5 days a week. Settlement price was where margins were marked to. So if you had a position and you were short in the hole down here and the price settled up here, this was where they would mark that position to. And if you were insufficient in margin, that's when you were going to get your phone call.
Ah, okay. And is that a
Okay.
known price for everyone, or is that something you have to go and find out?
It's something that you can find out. Most trading platforms will have I'm going to show you here, a quote board. And if you bring up the quote board and come on, it's between 4 and 5. Sometimes it takes this platform a little bit to populate. There's a couple of ways. You can go to cmegroup.com and ask for the daily bulletin. The daily bulletin will provide all the information about all these products, including settlement prices, volumes, open interest, highs, lows, and of course, settlement price. So this is of course not going to cooperate with me.
That's all right. I think so. There's a couple of ways you can either check out that your platform might have it, or you can go to
Yeah,
that
yeah.
place you
So
said, CME.
this is the quote board from um, the another platform. Okay, I keep this up to watch for net change, but if I open up and I can add settlement session settlement, there it is. Okay, so here's the E-mini S&Ps, 3073 even, 3073 even, 3073 even, 3073 even. You know what, that might be here. Gotta make sure it's yeah, that's June.
Yeah.
So anyways, you can put the
Yeah.
settlement on most quote boards and you can find it cmegroup.com / bulletins or daily bulletins. You can always search it in the search field for the bulletins, and then you can find the information that way.
Cool. Cool. All right. Well, let's have a look at
Typically,
this second trade that you got for us.
okay, yeah, typically, I mean, the settlement is going to be relatively close to that last trade at the 3 o'clock, at the end of the 3 o'clock bar. And you can see it yesterday right on it.
Yeah. Yeah.
Okay. All right. So the next trade, did not did not see it coming that this little selling tail up here was going to remain the high of the session. Made me a little nervous, got me stopped out. So I relaxed. I tried to stay cool. The next opportunity for this was actually in the C period. After it put in this high, it started taking out the low of the initial balance. The initial balance is the first hour of trade, and it's represented on this platform. This is the CTST4 platform by this blue line right here. Okay, now the initial balance is another kind of older pit term. It's where the locals in the pit would kind of try and wait to see where a two-sided trade was likely to occur. So again, the breakout from the low of the initial balance, I felt as though was my next real opportunity, having missed the opportunity here. So this becomes a bit of a breakout trade. Okay, breakout situation they're really hard trades for me because I don't like um, to kind of inventory trades that are against me. When I take a breakout trade from an initial balance, a true breakout trade is moving from balance or ranging to a trend. This is more of a shorter term type of breakout. So it took me 2 tries to get into this trade. The first time it broke out below, I took a short, and I did not like what I saw. It wasn't paying me right away. And I don't like to inventory breakout trades that don't go my way right away. So I got out. I took a couple tick loss. The market came back, and at the time, value low was right up here, but it was having trouble staying inside value. Value is this green line here, which was at the time, the low of it was here. We didn't have the extended range that we have now. So looking at the low of value, the inability of price to go back into and accept value, the next trip down, I took the short again. This time, it never went against me. I got in. It started paying me right away. It kept sagging. It kept sagging. The little boosts were lower and lower. So I was pretty confident that I had finally found a decent trade. Now, in the early session, this is great trade location for shorts. This is really bad trade location for shorts, which is, again, why I tend to time stop breakout trades. If they're not paying me right away, I'll get out of it. I'll take a tick loss. I'll get out of it at even. I'll take a 2-tick loss. But I don't want to take a 5, 10, 15, 20 tick loss in a breakout trade. Most breakouts tend to fail anyway. So the first time, no, it didn't work. Second time, did it again. Now it works. So where is my profit target in this? Well, I've got a 31.10 weekly kickoff level that I put out for everybody right here. That would be a kind of a first kind of out for that trade. But looking at okay, that's 30.10 is right here. This is that level that I was looking at for a profit target. But with all of the longs for the last 2 days, we're going to felt as though there was more to this trade. So really looking for a gap fill between the regular trading hour high from yesterday or a move back to settlement. And I felt as though this was kind of a high target area. This is the 10% correction off the all-time highs. We have our overnight low right here. We also have settlement right here. And in the same neighborhood, we have the high from yesterday's regular trading hour session range. So there's a lot of eyes looking down to this area. I didn't quite make it all the way down to this level. I got it down to about here. And then I said, okay, I'm going to be happy with that trade. So I took the trade and made it all the way down basically to settlement, short a couple of ticks, and then basically pulled back and ranged back above this 3,100. I think I said it was 31.10. It's 3,100 is the weekly kickoff level. And these weekly kickoff levels are areas where I'm looking for, here it is on the daily chart, this 3,100 right here.
Right.
These are levels that I calculate on Fridays. They're not meant to envelop the activity for the following week. They're meant to tell me where there's a possibility that the longer, stronger, real other time frame traders might need to want to or choose to adjust inventory at that time. So, today we opened above it, we traded back down through it, we closed back above it. I'm thinking that this market is probably a little bit strong. In the longer term, while we're on it, if you only have the regular trading hour session on your charts, this is a 4-day island top. There's a gap to the regular trading session, and then a gap to the regular trading session. So this can be a bit of a very strong reversal signal, and it looks like we're working on getting up to a test of that level. Just a little extra kind of thought there. Didn't really have much to do with the trades today, but interesting.
Superb. Well, look, I think that's a fascinating look into how you trade, John, and also market profile itself and how people could potentially use it, settlement price and all that sort of stuff. Now, I know that, look, TopStepTrader have been a great supporter of the show over the past few years. So, John, do you want to sort of let the guys know a little bit about TopStep and how they could get involved?
Well, absolutely. I've been with TopStep almost from the very beginning. I met Michael on the trading floor, and we all were kind of wondering what was going to happen when the trading floors kind of went away. I had stepped out of the trading pit a couple of years before that, and I met Michael, and he was talking about this trading combine, and it struck me as a wonderful opportunity for people just about anywhere to really have a safe place to learn about trading, even if they have no experience, tons of, or medium experience, or tons of experience. It's a great place to continue to develop your strategy in a safe area. Our kind of motto is we want to help people professionalize their trading. So the way it works is you get into the trading combine. There's a subscription fee. There's several different account uh, levels that you can start at. You're going to be trading a real-time simulated account with some basic risk parameter rules. If you can reach a profit target and not violate any of those rules, you're gonna move forward. There's another step where step one is more about showing us that you can profit. Step two is more about having really good risk management. But in either regard, if you succeed in the trading combine step two, you're getting funded. No questions asked. There's no subjectivity. It doesn't matter how you did it. You're going to get your shot. So we're going to basically put you in a real funded account with the same parameters that you had in step two of your trading combine. And if you can continue to be profitable and consistent, the world is your oyster. That's really what turns me on the most about this company is, just about anybody anywhere has the opportunity to learn in a safe way, to develop their strategy in a safe way, to prove their strategy in a safe way, in a safe place, and then to go ahead and have somebody else fund that strategy for you. It's when I started on the floor, I started as a runner. I worked my way up, learned about the game, got somebody to get me a shot at it, and that's the way it was. It's not there anymore. To me, the trading combine TopStep is the original, and the best way to look at this as your opportunity to learn about the markets and to eventually get funded in them.
Brilliant. Look, guys, yeah, so that's for both futures and Forex traders. So I'll put a link to John's original interview underneath this video on YouTube, as well as a link to TopStep as well. So, guys, if you guys want to take a look at that, either or, then please, I do recommend listening to his interview, because I've just read through all the notes I've taken off of it, and there's some gold in there, guys, absolute gold. So, John, once again, thank you very much for coming on the show, and yeah, all the best.
Thanks, Cam. And everybody, get out there and profit. Trade well, everyone. Have a good day.
And remember, subscribe to the channel, click the notifications bell, select all, and we'll see you in the next video.